A lot of people on this call raises money from retail investors, and
Yeah.
you raise money from, yeah, the 0.001%. So I would like to focus more on that audience. How, yeah, especially for those on here wanting to start working with family offices. You I know some might already started working with the smaller check writers, like the $3 to $10 million check writers, and then ultimately they would like to get into the bigger check writers. How do one get into the space of attracting whether it's multifamily or single family offices, and start to build that trust?
Yeah, that's a good point. Social media today is designed to build trust, not destroy it. A lot of people use filters, and that's just going to happen anyway with photo editing. But I think you need to be able to put something out there with genuine content so people know who you are. You have to remember we're in a post-Bernie Madoff era right now. And so there's no such thing as secrecy or anything like this or, anything weird. If you're not on social media, you're seen as being shady today, quite frankly. And I make a disproportionate, and you guys can follow me on LinkedIn. I know Tim does, or I wouldn't be on this, right? But there's LinkedIn. I'm always posting things. I'm always posting content. I'm always coming across as a thought leader in the industry. And then this way, when I go to high-end conferences, even before they charge me money, they'll say, fill this out, put in your LinkedIn profile, and if you pass, then we'll send you a credit card link. That's the way the world has gotten today because it's just people want to know who they're doing business with. The second thing I would tell you too is that once you have that set up and you have that all ramped up and you have a website, what I tell you to do is to go to higher end conferences. And I would tell you to be scripted tight. What have you done? What are you looking for? If you're talking to me and you ramble off on things that started in 1976, I'm going to lose interest and just walk away. Guys like me are constantly what we call French fried, meaning you throw a French fry on the beach, what happens? All the pigeons come, right? All the seagulls. I'm wearing like a red badge here. This green badge here, this one yesterday was red. I have a circle on my back, even when I'm in the bathroom. Hey, like, how you doing? But and there's something that a lot of people don't do, and it's really easy. And it's my rule of networking. The higher the barrier to
Mm,
entry a conference you're going to, as far as the price to get into it, the better the
mhm.
network will be. Okay. The higher the barrier to entry. If you're going to a free networking event, you're going to be stuck with a bunch of service providers and people who don't have any money, but who are looking for money. And you'll be wasting a lot of time, but that's what you get for free. But if you go to the higher end conferences and you wear the right clothes, like Tim Mai over here, you're going to attract a lot more attention that way because at least you're building authentic relationships. This is a relationship based business. I think the pandemic turned crypto into something being very transactional, and people think, oh, you're rich, Tim. Here's my pitch deck. Like, number one, I'm assuming you want to invest in Class A industrial. Number two is you don't know me from a hole in the wall. And number three is nobody's going to give you any money unless they give you your time first. And if you foster those relationships, like really the only way I can say it so that it makes sense, as if you're courting that person for marriage, you're going to have a lot more success that way. I think a lot of people think of it as they're young, they're trying to be institutional. People are looking for they're looking for community. We're in a loneliness epidemic, Tim, today. And I think the more that you can be out there and talk to people, it's worth it. This week is going to drive me into like craziness because I moved to Miami from New York for a reason. And that's the networking. And I have a lot of friends, but a lot of acquaintances who I get to meet every time I go from here to Palm Beach. I oscillate on the bright line between here and Palm Beach, and I'm always meeting new guys. And so it's, hey, meet Sal. Hey, hey, this. And if you read my book, there's some stories there which are pretty interesting. Yesterday, I had the Florida Ventures Forum because we've had a successful venture fund. We had an exit last year with Sing Life being bought by Singapore Life. And this year we're just today I'm at the Independent Sponsors Conference, and then there's this Latin American like conference, and those guys are nuts on Thursday night. That's Thursday, and that's just going to be absolutely insane. But the networking and being in the room with these people is very special, and that's really the key to success. You can have the best deal in the world, but if you don't know what to do with it, you can't raise the money for it, it's really worth nothing. And that's true with SpaceX, that's true with Stripe, that's true with one of our other companies called AI.io. It's a sports recruiting app. They just got a $50 million term sheet, and they're closing actually. I think they might have closed already. $50
Wow.
million investment from the Saudi PIF, which is a sovereign wealth fund. The networking, I never thought I'd be there 15 years ago, Tim. All right. Like, but
Wow.
here we are.
Yeah,
Yeah.
that's that's absolutely amazing. Like coming from where I am, I only recently even know what a family office is. Like until I came into this commercial real estate space, never even knew what it was and that it exists. And so it's been very fascinating. So let's say we go to these conferences where families might be there. What's the best way? I'm sure everyone, like you mentioned, you have all these people approaching you. What's the best way for us to approach a family office and start to build that relationship?
I think it needs to be correlated so that there's a weight in people. I have another saying too, is that if you don't respect a person making an introduction, you're not going to respect the person they're introducing to you. So what I would
Mm,
say is if you're a multifamily guy, say, hey, I would build a relationship, but this sounds terrible, but I was talking about it last week at a conference. People are too quick to send a pitch deck, right? They're too quick. They're like, hi, how are you, Tim? Here's a pitch deck. Nobody wants that.
mm,
I'd like to get them on the phone and get to know them. We'll be having some new life science company family offices, life science families coming into some of our real estate deals that we're starting to get back into now. And one of the things that's going to be interesting is I call them like, hey, how are you? Talk to them like a human. What are you doing? What projects are you working on? And feel them out first. And then afterwards, ask them if it's okay for you to send something over to them. I think people are just they're lazy. And if you don't take time to court these people, like you really want to have a relationship with them, then people will feel that authenticity. And I don't want that for anyone because I see it happen. And there's a level of salesmanship in this business. And that's what they taught us at Goldman Sachs, is that on our review, is that you had to have good salesmanship. And the second rule of
mm,
real estate, nobody knows this until it's too late, is to always be raising capital, good markets, bad markets, whatever. And I know that if I have, even with some relationships I have, if I'm in a pinch and I need a $5 million check for a real estate deal, they trust me that it's going to be a good deal, right? I'm not going to lead them into crap. So they'll make that. And I've been able to do that before. And you feel like you're moving mountains. I can't believe this guy is going to, come into this deal 2 days after meeting me. I just had to go up to Palm Beach, do a sniff test with him and his wife. The other thing too is that you need to start communicating deals in a way where it makes sense to the person. Nobody remembers numbers. People remember stories. And if you can somehow tie into your deal an elevation of your investor status, that would be great. One of the things I did, and this is an interesting idea, but what I usually do is I give a deal toy of our developments away to the investors. And then I also have videos, and I give the videos that are professionally done, a drone video, whatever it is, of the performance of this. Because what you want to do is you want to send that to them, not for your own ego, but for their own ego. And the more you impress them, the more you build their status and ego and identity around this, the happier they will be. I did this. This is a crazy
mm.
story, but it has to do with a company we made an investment into before AI got really hot. It's called AI.io, and I just spoke about it. Now, Tim, I'm sitting in East Hampton in August, and I get this dropped in my lap by someone who's big. And they said, we need $1 million. This family dropped out. This is the family who's leading the investment. This is how much they have. Come with a million
Mhm.
by the week, you can get in. And I'm like, this is insane. And if you know anything about soccer, what happened is that Todd Bowie bought Chelsea football club from Roman Abramovich during the whole Russia debacle. And so he was the owner of this, and he was one of the lead investors at
Wow.
AI.io. And I called up the CEO, it wasn't Todd, but the CEO of the company, and I said, look, I got an idea here. I said, I can get the million, but can you do me a favor? For every investor, it's great marketing. You like this, all right? This is the premium right here, right? For all you're gonna love it. Tim, you're gonna, and I want you to use this, and I want everybody to use this. I said, can you find out if you can get me 10 autographed jerseys by the entire football club for me to give away for any investor that invests at least $100,000 into the deal? I can tell you that people answered my calls because they were worried about it. You never know when a fund manager calls you or your private banker, right? So I'm like, hey, Heinz, guess what? He's what? What? I'm in. And he's in Italy. So,
Awesome.
so he has in his house in Salt Lake City a big thing that's been mentioned, like Chelsea Football Club
That's
with all the
awesome.
signatures and everything on it because I sold status. Did he really care about the deal? I'm going to tell you honestly, he didn't look at the data room. I see that there was only one person who clicked on the data room. They still
Wow.
invested. What happened was it went right through to the other side. And I need to have this because they were thinking about how they were going to show this off to their friends. And a lot of them had dinner parties where they're like, oh, yeah, Tim Mai, how do you know everyone on the autographed jersey for Chelsea Football Club? How did that happen? It's really interesting. I've given away vests for Brahmin partners Just people want that. If you're building a community, give them swag, especially if you're building a brand. One of the things
Mm.
I did when I moved to Miami, and I'll end with this, is that it was probably the smartest idea. I started a WhatsApp group called the 305 Intelligentsia with a bunch of New York families and Boston families who came to Miami and lived between Miami, Coconut Grove, and Coral Gables. And we meet monthly. And it's great because now I'm always on top of them. There's a community, and I usually reserve it for when somebody's coming down into town. Let's say, oh, Tim's coming into Florida. Let's go meet Tim. So you get to meet all my families. See what I mean? You have to go
Yeah.
out there. All right. You're not
Mm.
going to be able to raise money just using a spreadsheet today. People don't trust numbers. People trust narratives more. That's just the way it is.
It's fascinating. That's amazing idea too, like selling status. That's awesome. So share with us for especially for those that are not very familiar with family offices, share with us the different levels
Yeah.
of
Okay.
family offices, like multifamily, single family, and also too, what are they looking for that different levels perhaps are different, if any?
Yeah, so it's interesting. The best way to really talk about this is that there's been an emerging of wealth. So if we were to bifurcate it, it would be between established family offices, let's just call those single family offices,
Okay.
and nouveau reach, which are the guys who just had an IPO or inherited a lot of money. And we'll call those emerging family offices. All right. We have a benign word on Wall Street for everything that makes everything sound great. And depending on the size, a real family office has 100 million plus in AUM. That's it. There's nothing, but the more zeros going on today, it's probably going to be even bigger. However, a family, some of these people say they're families, they're not. You look at them, they look like they didn't pass high school math. One when you see one, okay? And you got to use your sixth sense. If you can't feel it out, maybe bring your spouse or a girlfriend because they're really good at smoking that stuff out, honestly. And I've had girlfriends who have been like, I don't know if I like that guy. And sure enough, later on,
Mm.
after a little time, it goes on. So you have the nouveau riche and you have the rich. The rich are looking for 50 years out. If you look at a good friend of the
Oh
Anheuser-Orton
wow.
family, they're looking for things 50 years out and they're going into private equity companies that are boring. Okay. The nouveau reach are not rich enough. So you get a guy with a $25 million exit. He's still envious. He still wants to see what the other guys are doing, but he's still yield hungry. Okay. He's still yield hungry. He still wants a multiple. He still wants to knock it out again. He wants to get a bigger yacht. He doesn't feel like he has like little man syndrome. Those are the guys that love investing into SpaceX, Stripe, and things like that. Whereas an established operating family is more interested in buying businesses, traditional businesses. Okay. I have that one family, and I'm not, and they're more focused on like the private equity side, and real estate side, whereas the newer families, they like to swing for the fences a little more.
Mm.
They're a little more biased in venture and also in real estate as well. And what the difference between the two is that the operating family that's been around for 6 generations can get what they want, meaning stakes in sports teams. Whereas the emerging family office has a lot of risk because he doesn't know which way is up. He doesn't know how to qualify a real estate sponsor or a GP for that matter. So if you can talk to them and give them some sort of comfort, and that is a way for you to pick up a lot of the smaller families. And it works out. You just got to know what they want, right? Like these big families, they're not looking, yeah, they probably have money in SpaceX, don't get me wrong, but that was more of like a discretion rather than a plan, right? I have one family, they're buying, they're consolidating all the grease trap cleaning businesses in Georgia. Big family, because that's not going
Mm.
to go out of vogue. People are still going to eat, and grease is still going to be needing to be cleaned 40 years from now.